Well, a very warm welcome to this, a special episode of the Now Selling podcast brought to you today by Palmer and Cook Developments. And I'm joined by a panel of experts, and we're here to talk about a very optimistic topic. But before we get into it, I'll go around the group and do a little bit of a welcome. Starting with, he's fresh off actually his last episode of the Now Selling podcast, and backed by popular demand, I must say. Of course, the man himself from Squirrel Mortgages. Callan, how are you going, mate?
Yeah, I'm good, Chip. Yeah, thanks for having us back.
No dramas, mate. You're one of the only guests that we've had on the podcast that actually talked any sense, so you're definitely back. But I digress. We do actually have two other guests that have also made appearances on the Now Selling podcast. First and foremost, the Managing Director of Palmer and Cook Developments himself, Mr. Mark Cook. Cookie, how are you, mate?
I'm well, mate.
Excellent.
Thanks for having me back.
Oh, mate, always a pleasure. Never a chore, as you know. And, of course, founding member, real estate tycoon, if you will. Been in the game for a long time now, 18 years, thereabouts. And I am, of course, talking about Rupert Kemeys from White Kemeys Brothers. Rupert, how are you?
Good, mate. We actually started this podcast as well, remember?
This is the second time you brought that up, mate. Absolutely.
And you kicked me off it.
As I did kick you off it. I didn't really kick you off it. I just don't know if the audience...
You were saying founding member for your podcast?
Yes.
Yeah.
Absolutely. Hey, gents, thank you so much for joining us today. Let's get straight into it. The reason that we've called this panel of experts together is there seems to be somewhat a bit of a light at the end of the tunnel. We know the last couple of years have been a little bit doom and gloom. Well, that's at least what the media would have you believe. But over the last couple of weeks, we've started to see a couple of factors in the marketplace that have started to take effect, which could see a bit of a turnaround when it comes to the real estate market. Kel, I want to start with you because out of all of us, you actually know what you're talking about. So what are some of these factors? What are some of the changes we're seeing? And what are some of the forecasts that have been made out of the marketplace?
Yeah, well, probably the biggest thing that's changed over the last probably 4 weeks is the interest rate forecast or the interest rate outlook. So, markets and the economists, the Reserve Bank, were all thinking you wouldn't see any decent rate cuts until next year.
Correct.
And the data has really supported that inflation's sort of under control, and that track's come a lot forward. So you're starting to see interest rates falling. The pace of which they're expected to fall has really picked up. And on the back of that, it's early signs, but we're starting to see a bit more sort of early signs of those green shoots and inquiry coming through.
For sure.
And that was probably quite different from sort of over a month ago.
Absolutely. And so in terms of the big question that people want to know straight away is, and it was only just a short amount of time we were sitting on our podcast and we were talking about forecasts and what's coming up, but we were kind of talking 12 to 18 months where we might start seeing some relief. What kind of timelines are they throwing around now in terms of the effects these changes might have?
Yes, in the short term, you've got an OCR review Wednesday, 14th of August, so just under a couple of weeks away. And the market's priced to about a 50% chance of a cut.
You reckon it's going to go down?
I think it's a bit optimistic, but there's...
So you're saying yes, it's going to go down. Cool.
It could do. It's been growing. Like the expectation is growing. There's unemployment data out this week. But the OCR review also October and November pretty much fully priced in a cut by November. But then the longer story is the economists and markets all fairly similar that by the end of next year, 2% cut to OCR. So you're looking home loan rates down to 5%. And
bargain.
If that happens, then that's going to look quite a bit different to today.
Roops, I'll throw over to you because...
Sorry, I just jumped in there.
No, mate. Jump in all you want, guys, by all means. Jump in all over the place. You're obviously day-to-day out in the field at the moment. Have you seen any dramatic changes in terms of what's going on in the marketplace at the moment? Have we seen a push through, or are people still, buyers specifically, on the fence about taking action?
We're seeing a bit more of a spread, Like about 6 months ago, it was all pretty pessimistic in terms of like offers. Everyone's saying, we're not at the bottom, like the owner has to take this. But what I mean by a spread is now we're seeing, for example, property got under offer the other day. We had 4 offers and there was a range of about 300,000. So you're saying like probably around about 50% for your OCR. There's 50% of buyers who are actually reacting to the market and going, it's actually getting better, and they're actually hitting the homes a bit harder. And then you've got the 50% are still stuck with the negativity a little bit. So I wouldn't say it's everyone's positive about the market, but it's definitely getting a bit more positive, more numbers for open homes, more offers. Absolutely. It's great.
Cookie, let's jump to you. In terms of, I mean, you're the one that's out there building all of these homes. What are some of the benefits you see in terms of the changes in the market for those buyers that might be able to, again, get into, like Rupert was saying, maybe they're not extremely confident right now, but they can see these opportunities in the future. What kind of opportunities do you see in the development side of things for those specific types of buyers?
Yeah, well, I guess that's what brought on this bit of a panel catch-up. I spoke to you, and I've also spoken to Callan about developers right now, and for a few years, you could say there's a lot that have just been swimming along the bottom. They've been trying to continue to keep their staff, trying to continue to put product out there, but the margins hasn't been amazing, if not break even in some cases. There's opportunity now where property developers across the country still have fairly low expectations to sell that stock. And if you can find those opportunities on the plans, let's say it's 12 months till it's completed and you have to settle on it. If we just refer back to what Callan said about interest rates to be predicted to be 2% lower by the end of next year, let's say you've got an 18-month build time frame, you put a deposit down now, in 18 months, that's predicted your interest rate will be 2% lower.
For sure.
If interest rates are lower, property prices generally go up.
Yeah.
It stimulates confidence. It brings more punters to the door. In my point of view, if you're looking to buy off a developer now, it's prime.
Yeah.
Yeah.
Callan, what about you in that regard, mate? Do you think this is a great time, again, to be buying? Not just necessarily off the plan, but just buying in general?
Yeah, well, I think like it's been a buyer's market for a while, and at some point that's going to change, and it's looking like those sort of green shoots where you're gonna see more buyers out there. And
What do you mean by green shoots? You said that twice now. And
It's that inquiry. Yeah, they come.
I think it's a gardening term, Rupert.
sounds cool.
You're going to start using that now.
Early signs of
Growth.
of future growth. So and it's not just the interest rate track as well. It's there's a lot of other changes that are getting easier for borrowers. So where it might have been a buyer's market or the buyers really calling the shots, you'd expect to see more buyers coming in competing. And at some point it's got to change. When you see the sort of house price stats come up in the results, it's probably 3 or 6 months prior those decisions were made that drove those results. And if you look at the economic conditions 3 or 6 months ago to what they could be in the near future, I guess the point talking about it now is to give people some information that might help them to not wait until they've seen in the papers that it's turned back into a more competitive market for buyers. So, if you're ready and you've got good job security, I think now's good. And if on the new build side, if you can't really see developers being able to put product out there any cheaper, and if you can get something at today's price that you can settle on in the future at what should be a lot better interest rate, then there's some good potential upside.
100%. So speaking of those that are selling now, we've obviously got a lot of stock coming on the market. There's been a bit of an increase over the last couple of months. But what's the sentiment from sellers at the moment?
It's more like sellers are kind of a bit more realistic around pricing now. They kind of know where the market's at compared to when it's chasing down the market. People are obviously looking at what the next door neighbour sold for, and then sometimes it's 50 grand more than they can actually get. But yeah, we're going to have to get through a bit of stock. But it's interesting in Lower Hutt especially, we're not actually holding as much stock as elsewhere around the country.
For sure.
So it won't be, but it happens quite fast, the whole supply and demand stuff like that, economics 101, so it will happen quite fast and that will turn, but who knows when that's exactly going to be. But we're going to see an upturn in volume, of course, first before we see pricing action. Sure. But we've already seen growth in volume. You can there's a graph that shows that the volume's been spiking up for the last few months compared to the last couple of years. But like Cookie was saying before, as soon as that OCR goes, that correlates straight to price action as well. Normally volume first, then price. Yeah, and it's going to catch everyone out.
Cookie,
Got a question for you, Rupert.
Yeah.
So some of the stock that hasn't moved for some time, and the point of this to help people with some strategy to get into the market. Do you think some of these houses that have been on the market for some time would consider offers now with delayed settlement, just with an understanding of where interest rates are happening? Like, would it be uncommon to buy a house today with, say, a 6-month settlement date?
It would be fairly uncommon, but not as uncommon as it was in 2021. Like, a lot of people are looking for solutions more than results right now. So, yeah, there's tons of people that, hey, if they got the price they wanted, but they had to wait 6 months, if it's for an investment, or got the mortgage broker, so he knows what that's like as well. If they have to secure an unconditional sale, and then they can go to their bank and show that, sometimes it can help. So, there's a lot of strategies out there for buyers that can do different strategies to get a buy across the line.
Yeah, for sure.
Callan, let's talk about rates, because that seems to be the hot topic at the moment. Every time I open up my Facebook or my Instagram, or there's something going on about someone's doing this, some bank's doing that. What is the feeling with the banks at the moment? I mean, you're dealing with them kind of on a daily basis. Is it, these ones are jumping and everyone's following suit, or is there a little bit more strategy to it? Or maybe you could just explain what's happening with the rates at the moment.
Yeah, so the wholesale rates in anticipation of these cuts have already dropped, and they've dropped and they've held, so the banks have already moved. And like right today, and this could be dated pretty quick, like a 6-month fixed rate is 6.85 and a 1 year 6.65. So those are around about 0.3 less than what they were about a month ago. So that's already like a significant move. The banks are fairly similar. One tends to move and they sort of tend to follow. They tend to stay about within 0.1 of each other in terms of the big banks. But they've also come out with the triple CFA, the legislation that made life really painful for borrowers, is the prescribed affordability, it was called, where the banks would sort of set how they had to do things to determine whether your loan is affordable. Their section's been repealed just at the end of July. So the banks are a bit more flexible in how they determine your affordability. So it'll just make it a little bit easier. Also, what we have just seen in the last week is the bank's test rates.
Yeah, so that was the next one I was going to ask you about, is that's got a lot of media coverage at the moment as well, is the old test rates.
Yeah, so people are struggling to borrow the right amount because the bank's testing them as though they're paid 9% or more. And we've just started to see those test rates come down sort of 0.25% across different lenders. So as interest rates fall, those test rates will come down, and people will have more borrowing capacity. And it'll be more affordable on a cheaper rate as well. So there's a few other regulatory things that LVR restrictions for low deposits are getting a bit easier. So, it's been probably a few years of extra regulation making it harder and harder, and then more expensive interest rates. So it's just got harder and harder and harder for the buyer. And we're just starting to see it getting a little bit easier, which is going to add more buyers into the mix.
And with that, with those other buyers, obviously fuels competition. And if that happens, do we start seeing prices increasing, or do we start just seeing the natural Wellington system, which seems to just kind of level out? What do you think, Roops?
We'll slowly climb out of it. I think a lot of people were expecting us to climb really fast out of it, but if you go back long time ago, Chip, when we first started real estate, 2007, you'll see that it took a long time to get out of the actual recession. But at the same time, we've already, 2021, when prices took a massive recorrection?
I think it was November when everything started.
Yeah. So you look at it and we're 3 years into it.
Yeah.
I was actually thinking about this the other day. Cookie is so quick. Yeah. And Cookie used to do my mortgages back in the day when I was buying. And I remember it feels like exactly the same time when I was buying a lot of houses in Nainai, Taita, Stokes Valley. And I remember the time Cookie was like, he actually told me this a few years after. And he said to me, he's like, at that time, Roops, I was thinking, what the hell are you doing? Like I was buying all these things, they were like 200 grand.
Feedback too.
Yeah, I was, yeah. I was actually, at the time, I had no idea what I was doing.
Solid investment advice
Yeah.
on the podcast.
But it was that was all through 2009, 2010, and it was interesting because there was no growth in the market, and that's when I personally love to buy. Like I haven't bought anything since 2019, have not even thought about buying until about a month ago, and I was just waiting, and now I'm starting to gear up to really get back into buying. And yeah, I've got a bit of a different way of thinking about it. When you look at something like new builds, like you're saying, you know, when's a good time to buy a new build? No offense to, I'll probably hurt a few feelings, but like a few years ago when everyone was just buying and selling off the plans, like it's highly speculating. It's just gambling. Like it's gonna end. Like there's a point and everyone knows it's gonna crash. But when buyers are coming to me today and saying, hey, is it worth me buying now? As long as there's a long-term strategy,
For sure.
that is legit investment.
Yeah.
You know, and it's like that is an actual way to make money long-term. And yeah, of course, you got people that made good money from speculating in 2019 to 21, but it's like there's only that small gap.
Yeah.
So if you don't want to play in the little gap, which might actually take us, because you're saying how long, well, it might take another 5-6 years to get back to the absolute top again when everyone's just flying offers and everywhere. But if you want to make some real money, buy now.
Yeah.
You know, like, and it's real money. We're not talking like, yeah, it's like if you're actually going to invest properly, you've got to look at buying at the right times, which I'm not saying it's today, but if you start today and then go through the down period, you're the one who's going to be making the money when it goes up.
Yep.
Everybody else won't buy, and then they'll start buying again when everyone's at the very top, and then they'll...
Monkey see, monkey do, follow the leader style.
Yeah.
We when I spoke to Rupert about it, actually, I said to you, it's about understanding to buy when it's uncomfortable, be comfortable when it's uncomfortable. And you spoke about the black sheep.
Yeah. And it has been the black sheep about like when to buy. But yeah, a lot of buyers were actually hitting me up, and obviously as a real estate agent, it's hard because I know a lot of people. And a few years ago, should I buy this off the plans and do that? And my advice to them was no.
Yeah.
It was legit, because people are, and I said no, because I couldn't look them in the eyes and say, yes, buy this, put it back on the market, you'll make 50 to 100. Some of them did.
Yeah.
But now people ring me up and go, should I buy a house today?
Yep.
I'm like, well, what's your plan? They say long term. I go, yeah, that's great.
Yeah.
I believe you will make money if you do that now.
Is that the risk that we're going to see? Is that if everyone just follows the leader, that people are going to miss out on this, like in terms of what opportunities they've got? What do you think, Mark? You've been in this game a long time, mate. I'm sure you've pushed out a few mortgages over the past few years. Is it something that you see as like kind of a repetition with markets?
Well, I guess it's just like you said, it's not following the leader. So not gaining the confidence in 3 or 4 years to, say, buy off the plans or buy another property, and you've missed the boat. So, yeah, I think personally, I think the time is right. It's now or it's for the short foreseeable future. I also like just a few things. I mean, in terms of economies, things that are hitting the market as a property developer, and I can't speak for all of them, but trends seem to are similar amongst us all. We haven't bought a lot of acquisition. There's not a lot of resource consents going through the councils. There is a lot more red tape today in construction than there ever has been. There's second stages of resource consents with like Greater Wellington Regional Councils. There's new flood mapping. There's a lot more hoops to get through. So for the developer world to gain confidence and start buying land and start putting houses in the market is going to take some time.
For sure.
Like a resource consent, building consent before we start breaking ground can take a couple of years.
Yeah.
So if there's demand, there's more people actively buying, there's not going to be as many houses being built in our country as there has been.
All right, Callan, let's switch back to you, because before we get all caught up in the terminology so much, let's take it back to a bit of layman's terms for our viewers and our listeners. What does all this mean around deposits? We mentioned the triple CFA before. Talk us through it. First-time home buyers, potentially investors, what have you, new builds. I'm sure there's a lot that you can elaborate on there.
Yes, so one of the challenges for buyers has been deposit. and there's something called LVR restrictions, so loan to valuation ratio restrictions, which the Reserve Bank, our regulator, has put a handbrake on basically how many loans the banks can do with smaller deposits. If the quota that they can do is increased to 20% of their total lending, so it's an increase in the amount of loans they can give out, so they'll be easier. But for a new build, the banks are exempt on a quota, so they can give out as many as they want to. It is possible to do it with a 5% deposit.
Okay.
And for a first home buyer, you can use KiwiSaver if you've been in it for 3 years. 10% deposit is generally a better place, but also depends a little bit on your income as to what loans are available. So, there was a lot of thought that you need a 20% deposit to buy a house.
For sure.
But a lot of people are buying with a 10% deposit.
Yep.
And KiwiSaver is making up the chunk of that as well.
Cookie, with that in mind, I mean, it seems like a no-brainer. Like, if you can get it at 5% and, you can use your KiwiSaver, you've got a good piece of, a good chunk of change, I should say there.
Yeah.
I mean, there's got to be benefits to buying a brand new home. What are some of those benefits? I mean, you guys are all about quality. What are some of the things as a buyer, out the marketplace that you're getting for, easy to get?
Well, you've got all your healthy home regulations that you got to, everything's just as simple as even just being double glazed these days.
Yep.
You got 10-year build warranties. You got all your manufacturer warranties. Everything in your home is brand new. Like literally, pull the cellophane off, and it's yours. I mean, as an investor, whether it's a townhouse, it's an apartment, it's a unit, you've got next to no maintenance. And I can speak from example, walking into a brand new property, even up to 3 years later, and you have that anxiety of what am I going to find? It looks exactly the same as when you bought it, subject to a strong tenant, of course.
And also, I mean, talk to us about, there's that first year, isn't it? The angel period or what have you. You've built something, you're a new buyer. And I mean, you guys specifically, Palmer and Cook, I think we just did a video on the snag processes and things. People that don't know that and the benefit of that, maybe you could talk us through that.
Yeah, for sure. So when you buy a new home, and it's part of the Building Act, basically. So you've got a snag process the day you inspect it. You have a 30-day settle down period where we re-engage with you for anything that might be wrong with that property after 30 days. Usually it's, I guess, at the end of the day, 90% of homes in New Zealand are made out of timber. Timber's alive. It needs to settle. Things like slight cracks in paint and things appear. Those sorts of things are taken care of. But you, in fact, like you just pointed out, have up to 12 months as a maintenance period on your new home. So it's not for damage, but it is for wear and tear, It's for defects,
For sure. Which seems a little bit different from buying something, that's already had 30, 40 years worth of environment and things thrown at it.
I guess as well, like, absolutely. And I guess as the Building Act and as building rules and regulations improve in the country, you're buying today's standards, things that have 20, 30-year warranties have been around for that long.
For sure.
You're not buying through periods of the market where they're, the leaky home period of the 90s or Duck's Quest in the 80s. So
there's a bit of Duck's Quest.
So basically you're buying at the current day standards of what a brand new build has to offer.
For sure. So, and obviously getting the benefits of a low deposit, potentially 5%, and then getting all the benefits, obviously, of buying brand new. Rupes, going back to what you were saying before, because I think it's right on point, and we're obviously talking a little bit more about investing now. How important is yields at the moment, and are you seeing good yields and opportunities on new builds? And is that something that investors should pay attention to, or could you elaborate on that, mate?
That's kind of why I stopped buying in 2019, is because the yields, I do a very basic calculation, but the yields got out of whack, and that's when you can kind of see when the market's overheating, because the yields started getting down to like 3-4%, which didn't really make sense. But in terms of looking at getting back into the market, I can see now that the yields are coming back up, which always helps, like Callan was saying, with the OCR going down. to meet that as well. But we're starting to see cash flow positive properties come back in.
For sure.
And with interest rates coming down, rents are actually looking all right at the moment. And yeah, we'll start seeing a bit more movement in the new builds as well. You know, some developers are doing the dual key kind of stuff, and if it was solely an investment, but of course, like Palmer and Cook, I've got some nice homes at good price points as well, and it's just finding the balance of if it's an investment property where the price point is compared to the rent. So 100% the yields are getting better, but they've still got to get a little bit better to get into the kind of into green shoots.
Hey, look at that, eh?
Yeah.
Did I use that correctly?
Sort of. Not quite seeing the green shoots.
Yeah. Well, not quite seeing the green shoots just yet, Chip. So,
Cookie, I'll throw that back over to you. I mean, when you're looking at developments, are you thinking about investors? Are you thinking about fit? Like, what are some of those things that you're thinking about in terms of your product? I suppose, is it location specific, or is every development different?
For myself acquiring or our purchases?
For purchases.
Yeah, for sure. Yeah, I think if you're looking, you know, obviously the market's going to affect your capital gain, but also for me personally, it's how many townhouses or apartments units are in that development itself.
For sure.
So personally, if I was going to buy an investment looking for some capital gain, I would personally buy that with a lower number of units on that site. When I say what is that, so probably 20 or less. Once you're sort of into that couple of hundred, you're really governed by too many examples within that development. Property valuers today tend to try and get examples of sales outside of that development itself. So if you're buying, you're buying one unit and it's one of 6, then they're going to look for price rises within that local area to help you value your property.
For sure.
If they're valuing it in a couple of hundred, they're going to look over the back fence. So location is important. Number of units within that development for me is important. And probably if you're going to rent it, it's public transport. So railway corridors, vicinity of walking to shopping centres and things like that. So when we're looking for land to develop, we're looking for all the same things, to be fair.
Yeah. Which is vice versa what purchasers should be looking for as well if they are investors.
yeah.
Callan, back over to you, mate. Let's talk about the perfect storm, so to speak. Okay, unemployment, obviously, the figures are coming out. I think it is this week?
Wednesday.
Wednesday. It's likely that there's going to be an increase in unemployment,
Yes.
which puts more pressure on the Reserve Bank to counteract on the OCR.
That's right.
If that happens, how quickly can we see interest rates really scale back?
Yeah, so the unemployment's kind of the negative consequence of high interest rates, and the main thing is the inflation data, CPI, and every homeowner's probably just got their rates notice recently, fall off your chair stuff, and along with the house insurance. So those are two factors that are keeping inflation high. So the third quarter, which will not be until the end of September, the Reserve Bank might want to wait to see that, just to see for sure that inflation's under control. If that's on the right side of forecast, then you could see interest rates drop pretty quick. If you see higher unemployment, I think the market's expecting 4.7% of those who want a job not having one, or the Reserve Bank 4.6%. If you see it above that, then you could see an August move. But regardless, the wholesale markets will take over, and that's what the banks are paying money at. So even with the anticipation, we're seeing the falls, and it's just really exactly sort of when, how quickly, how low is what you never know. But it's sometimes you have an outlook that's fairly uncertain, but the signs are really compelling that interest rates are going to fall a decent amount. In the near term.
What's a decent amount? With this time next year, you have to say exact figure.
Yeah.
You can't beat around the bush like a politician.
Well,
what are you picking for a 12-month fixed term loan?
Why don't we all have a statement?
Yep. August 2025, 1 year fixed rate 5.4%.
5.4. Holy. Yeah. I'm just happy with that.
I'd be really happy with that.
I'm going to go 5.39.
5.39? I'm going to go even better. I'm going to go 5.29.
Yeah. Look at that. I'm going to go 5.4.
Logan.
So then Callan can't win.
There you go. Just winding back there, let's say, for example, at the moment, we're all here saying, oh, yep, optimism on the horizon, these things could happen, interest rates could start falling. You got people watching this, the hundreds of thousands of viewers that we've got. Many of them are saying, that's all good, guys, but I'm going in this week to get my bank loan approved or looking to get my application in. Callan, advice, what should they be doing? Should they be fixing for 1 year? Should it be 18 months? What would you be advising your clients to do, given the fact we're in this kind of uncertainty period at the moment?
Yeah, so really, really topical and general advice, because everyone's situations are different, is fixing for short,
Okay.
and so 6 or 12 months, and some people are even actually settling their loan on a floating rate, and or letting an existing loan roll on and leave it on floating and see what happens in the next couple of weeks. That's a little bit risky because you pay a higher rate, but 6 or 12 months is, you're still going to get a decent rate now, and you're going to catch the falls at some point. So that's where most people are landing.
Gotcha. Okay, cool. Good, solid advice there. Cookie, I know that we are both very optimistic human beings, and I want to just, we're probably getting towards the end of the podcast, and I want to throw it around because it is topical. It hasn't been the greatest last couple of years in regards to everything that's been happening out. I'm sure you, as a developer, a property developer, have probably been hit from all different sides of this market.
Yeah.
Mate, how do you maintain an optimistic mindset, or whatever you want to call it, and what do you think really needs to happen or will happen in the coming, if this was all to all take effect, and what do you see as some of the opportunities that will come out of it, maybe for your business?
Yeah, cool. Thank you. I guess the way I've got through the last couple of years is thinking of every challenge as a hurdle, and saying every time I jump that hurdle, someone else is knocked down by it, and just trying to maintain, like I said before, continue to build, continue to keep the best staff you have, if all of them, and that's what we've achieved, and yeah, just keep fighting towards the light at the end of that tunnel, which I believe is now. What else do I think needs to happen? I think it's what we're doing now. It's about getting positive media out there and changing the tide and saying, "Hey, it's happening. Let's turn the corner." So yeah, it's for me, like if there's people follow policies and politics, but I do think the media have a lot to do when there is change in politics or when there is change in the market.
100%.
And I don't doubt for a fact that that good news story is about to start. Yeah. Sure. So if the OCR drops on the 15th of August, or if it stays still but they come out and say it's going to be 2% lower by the end of 2025, the media will get on that, and the wave will start, and confidence will come back, and it will be spring, and we would have turned the corner.
Yeah.
So
sure.
Yeah.
And is that confidence, is that going to be, if this was to happen, does that flow through into your business as well?
Yeah.
That make decisions on your day-to-day?
Yeah, it does.
Future
Yeah, for sure.
seem to be a little bit more stronger, a little bit more direct?
Yeah. So we'll be looking for, potentially we'll go out and look for land acquisition that may not quite work now.
Yep.
But take the punt that things are changing. We're looking for more staff.
Yeah.
Basically we're starting to gear up.
Yeah.
For not for what we have had post-COVID, but for better times.
Gotcha.
Yeah.
What's that saying about don't catch a falling knife? You heard that one?
I'm just still getting that one. Green shirts, mate. What is it? Don't catch a falling knife.
Yeah. About the market when it's going down. So that's what basically you think that the market's not on the way down anymore.
No,
you think hey, we're at the bottom. Don't catch a falling knife, so don't buy on the way down. Because I think it's that, but we'll look it up anyway.
We'll throw that in there.
So
Yeah. So you're kind of preparing for the years ahead.
Yeah.
And now's a good time to.
yeah, I moved a bit of the soil and saw some green shoots.
Yeah, nice. Was there a knife there?
No, I got out of the way.
Didn't catch it.
Yeah, I guess like all the things that I'm taking in, like you and I refer to a lot, Chip. We try to turn the media off
100%.
where we can. And from what I'm analysing from my surroundings is that things are changing, and we need to gear up now.
Yeah, 100%. Roots, similar question to you, mate. I mean, you're in the real estate market, obviously the industry, which is it's a tough grind for a lot of, not just agents out there. You've got vendors, you've got buyers, lots going on. How do you maintain an optimistic mindset approach?
We're still selling quite a lot, so it's pretty easy to keep a well positive mindset. So it's still going pretty good. I don't know. I'm pretty positive anyway. It's just
Yeah, you seem like it's on the podcast.
that's all good, eh? Like, yeah. The market is what it is. So you kind of just get out and go selling and make that happen. But yeah, in terms of the market, I think it's one of those. You got to look at it and go, do I want to be the luckiest person ever in 29? I always think in 5 years. Time. Because I remember when I was buying all my first properties throughout 2008 and 9 and 10, and we were talking about that before.
Yep.
I think it's the same. What's going to happen this time is everyone's going to go, why are you buying now?
Yeah.
And then in 2029, if you buy now, everybody, I'm pretty confident that will happen, is they'll turn to you and go, man, you're so lucky.
Yeah, for sure.
You're the luckiest guy ever buying, man. And then I was looking back at that because everyone said how lucky I was, and remembered me and my mate Maddie we worked our absolute arse off to buy these properties.
Yes.
And I was like, wasn't that lucky, was I?
You got 8 people, 8 mates living in a 3-bedroom house in the back of Tida.
Unreal mortgage broker.
Talking about interest rates too, one of my mortgage brokers told me to lock in for 5 years, and that did not work out, Chip. So if you know who that was, that'd be my last mortgage broker. Anyway,
Lucky you found me.
so the good advice there, Callan, on the 6 to 12 months lock in. But yeah, I think it's a perfect time to be looking at buying and investing, especially for first home buyers. There's a lot of people that bought, unfortunately, at the top as well, but for those people as well, I bought in 2021. If you're holding long term, it's like when you ask people as well, are they pissed off they bought in 2007? No one is.
Yeah.
But were they pissed off in 2009 when they bought in 2007? Yeah, they were. So it's about having that long-term forecast.
Well, I think even today I read something in the Herald, and it was talking about we're obviously down on the COVID, the heights of COVID, property prices have come down. I think it's across the board 16, 20%, somewhere around there. Callan, tell me if I'm wrong in a minute. But in the same article, they said that, we're up on pre-COVID levels as well. So if you'd bought at the height of the market before, everything had gone, what have you, and what you're saying as well is that if you can stick it out and hold on to it, it's going to look brighter for you in 10 years' time as opposed to what it is probably now.
Yeah. I think people just look so short-term all the time.
I think that's a very key point.
Yeah, and that's why as well, like Cookie was saying, of his business going forward, he's looking long-term. He's not looking and going, okay, well, I've got to make all my money in 2025. He's looking at buying sites now, looking for the next 5 to 10 years of growth. And even the staff as well, like it would have been easy, I'm sure, Cookie, to go, all right, well, we're not actually making as much money as we want to right now. Let's get rid of all the staff, thinking about the following year or two. But you got the plan and the vision, eh?
Yeah.
You do?
Yeah. I'd like to think also a lot of companies that rather than they have slowed down on providing the market property.
Yeah.
The ones that have survived spend a lot of time on making the product better.
Yes.
Like fine-tooth combing a lot of things they do.
100%.
Yeah. Good time to slow down and look at your processes and stuff, eh?
Exactly. You would have done the same.
Yep. Callan, we'll finish off with you, mate, because obviously we haven't asked you any questions today. We're talking optimism. You're the first port of call that a lot of people come to when it's their home buying journey. So you probably, out of anyone, have to exercise a very optimistic mind when it's coming to try and help these people achieve their dreams. What are some of the things that you're focusing on and some of the opportunities that you can see out of these changes happening?
Yeah, good question, Chip. So the probably like big thing for people who are looking to borrow money is just being confident in their income, like their future income, their job security, because it has been tough, and we're talking about unemployment before because more people are without jobs, and probably a bit back to what Cookie was saying is, when you go through a downturn, things might not go so well, but use it as a good opportunity to be stronger for it. What doesn't kill you makes you stronger. But with the particularly the first home buyers, is if they can line things up now, and we're using current interest rates, which historically are above a sort of a neutral type rate in this current economy, and they've got good job security, then things should only get better. And if they're first home buyers, they're generally younger. They're going to increase their position over time. Like their income's going to grow as they advance in their career. Just with inflation, their income's going to grow. Interest rates will go up and down throughout the cycle, but getting on the ladder is, if you can make it work, it should only get easier over time. And then house prices, like Rupert was saying, is it can be hard to time exactly the market, but over time house prices go up, and fundamentally the whole economy is structured to have a modest rate of inflation, and that's going to flow through incomes and flow through to house prices. So it's just probably giving people a bit of confidence to focus around getting it to work from the start, and then you call it getting on the property ladder. Like the earlier you can get on, the further you can go up it. So that's the sort of main things that we talk to people about.
Absolutely. Couldn't agree more. And I think, look, that's a great way to finish off today in terms of what we titled this panel, if you will, when we got together, which was some optimism in the marketplace. So hopefully all of those sentiments that have been recorded here today, people will go away with that and, see some of the light at the end of the tunnel. Always a pleasure and never a chore, gentlemen. I'd like to thank the Managing Director of Palmer & Cook Developments, Mr. Mark Cook. Thank you so much.
Thank you, Chip.
And, of course, we've got Callan over here from Squirrel Mortgages, back to back. Can I get you back for a third, maybe? Yeah. We should start doing a quarterly one, eh?
See if anyone listens.
Exactly. No. Hundreds of thousands, mate. Hundreds of thousands.
Thanks, mate.
Callan, thank you so much, mate. And, of course, my right-hand man and the previous co-host of the Friday Shout. And now, mate, you're getting up there in your rank, mate. You just got to learn that green shoots and drop of the night, and maybe we'll get you back as well. Yeah. From Kemeys Brothers, Rupert Kemeys. Mate, great to have you on. Thank you so much.
Thanks, mate.
And this has been the Now Selling Podcast. And as we say, when it's all said and done, we are gone.